And thanks to all of our witnesses for your insightful testimony. What we're talking about here today are policy alternatives and there's trade-offs. And so thanks for helping us get to this. I want to scrutinize two topics. One, the Hagerty-Also-Brooks legislation and the potential cost of that. And secondly, this ETAG concept. Mr. Ryan, thanks for Old National's presence in Kentucky and the Commonwealth and the contributions to economic activity, especially in Henderson and in Lexington as well. I do applaud your efforts to try to protect those mid-sized institutions like your own, but I am concerned about the Hagerty-Also-Brooks cost. Let me ask Mrs. Castilla to amplify this idea that the effect of increases in deposit insurance on premiums that institutions pay, and will these costs be borne by the institutions themselves or customers, as you said, in the form of lower interest paid on deposits, higher interest paid on loans, and other increases in fees?
Thank you for the question. So I look at this bill as being more of a buy now, pay later type of scenario where I don't really know the cost. We're utilizing already paid-in assessments to subsidize some of these costs, with an exception stated for community banks, but still using these assessments that we've already contributed to subsidize the cost of this legislation.
And Mr. Ryan, can I go back to you? I want to give you a shot here because Ms. Castilla's testimony is that the lesson of 2023 is not that 250,000 limit is too low. Confidence doesn't come from insuring every dollar. Why couldn't Old National or banks of your size use, as Ms. Castilla argues, collateralized deposits, Federal Home Loan Bank letters of credit, reciprocal deposits as amplified by our legislation? Why is it that Hagerty is the only answer here?
We certainly use all those tools. However, I would suggest to you that during times of crisis, they're very complex, they're expensive to administer, and our businesses, quite frankly, would prefer to stick to FDIC insurance.
I understand that. Let me just ask one final question about the Hagerty-Also-Brooks proposal. The proposal would have the FDIC spread its recognition of insured deposits over a 10-year period in order to get the reserve ratio. Mr. Norquist, does increasing insurance coverage 40 times what it is today, but not really paying for it except for over a decade, does that make sense to you?
Not particularly.
Let me move on to TAG. I want to, as an alternative to this Hagerty-Also-Brooks idea, I want to enter into the record, Mr. Chairman, a letter from the Kentucky Bankers Association and some of the other state banks associations advocating for an ETAG.
Without objection.
Why, Mr. Furlow, why is the systemic risk exemption inferior to ETAG? I mean, wasn't the failure of SVB and the deposit outflows that we saw as a result of that the result of regulatory delay and indecision over that fateful weekend as opposed to the absence of an ETAG?
That absolutely was part of it. I mean, y'all remember that weekend. Everyone was scrambling, both on the industry and regulator side, to understand what was going on and what was going to happen before Monday morning. And so the reason that we're proposing this ETAG proposal is to ensure that there's something in place that can quickly be implemented, especially in the social media age when contagion can happen.
Well, I guess my question is, isn't the problem the regulator's failure to execute the systemic risk exception? Wasn't that the issue as opposed to the absence of ETAG?
That is certainly a part of it.
Okay. Well, just in general, Mr. Furlow, can you tell us why you believe that the ETAG program would be preferable compared to across-the-board blanket increases in deposit insurance limits, and whether it would be a cost saver in the long run compared to FDIC resolutions of failed banks?
Well, sometimes I think we forget what deposit insurance is there for. It's first and foremost to prevent bank runs. I think we've focused a lot on what happens after the bank runs, who pays, who's going to pay what. The first goal should be to stop bank runs from beginning at the first place. And so with our proposal, if we have a program that is set to be utilized at a moment's notice when we see contagion starting, then we can quickly say to depositors, regardless of the type and size of bank that they're at, you're good.
Finally, Mr. Ryan, why isn't ETAG superior to the costly increase in deposit insurance limits?
Deposit insurance reform is about prevention, E-tag is about cleaning up a crisis afterwards.
Thank you. I yield back.
Gentleman yields back.